Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Dadia. Overall, if you see in terms of markets, we are very much hovering around the 17,000 levels in terms of Nifty, and a pretty muted day of trade is what we are seeing. No major, up moves or down moves that we are witnessing. How the day pans out is going to be interesting to watch out for. It is expiry week as well, so there is going to be heightened amount of volatility. But to discuss the fundamental aspect of the markets and stocks, which could be in focus. Joining us on the show is Kshitiz Mahajan, Managing Partner and CEO at Complete Circle Wealth Solutions. Kshitiz, good morning and welcome to the show.
Hiram, thank you very much. Good times to talk about what is happening in market.
Absolutely. Kshitiz, my first sector that I want to discuss with you is in terms of the pharma space. That is something which has got momentum in today's day of trade. And overall, a couple of counters that are in focus, from a Divi's Laboratories to a Sun Pharma to an Alembic Pharma with regards to the the 483s. What do you make of the sector and how are you viewing it? Because Aurobindo itself has been one of the key performers from the sector over the last couple of trading sessions.
So when you talk about pharma, Hiral, it's more of a cyclical sector, and we've been seeing that post wave two, COVID wave two in 2021. What has happened is that most of the hoardings of medicine, what has happened, has led to spur in sales of volumes of all these companies, and then we have seen there is a meltdown, and obviously there was a lot of pressure on the API prices, which was coming from China, and some drugs which are going off the space because they are no more required by many of the doctors. So that has caused a lot of pressure on all these companies broadly. So generic pharma, otherwise, it's more to do with exports, and we have seen that price pressure is there on most of these generic pharma drugs. But yeah, having said that, the sector has not been doing that well since last 1.5 years. Seems like things are turning around. Seems like lot of push from government also to be self dependent on the pharma side. Look, 70% of the API we used to export from China. Now seems like that dependency will reduce. We can make out from the few of the biggies like Divi's has reduced 20% dependency globally on the import which they used to do for APIs. So there are plants coming out, there are approvals which are on the way. I see that sector should do well from here.
Right. And any top recommendations coming in there, specifically from perspectives of the names that we've already discussed?
So, Divi's is a part of my portfolio also, and we see that there's a lot of scope building up. In fact, price has corrected to almost 2,800 level as we speak right now. We see that they are not only investing in their existing part, but they are focusing on the CRAMS side of the business, as well as there's a lot of input is going on the research and development of various other facilities also, whether it's peptides and few other things which are coming to come out with their new plant where they have got all the necessary approvals. So I see that Divi's is one company where to some extent we see that it should and will do well from here onwards. And if you see whether it's cough syrup or painkiller, they are in north of 40% in terms of API, supply to various companies. So as a whole, revenue wise also, last quarter has seen a lot of dip. Profitability wise also it has seen dip. As I said, because of the high growth of sales in 2021 vis-a-vis 2022, there's a lot of dip in sales number. But yes, seems like from here onward there is upside only in the stock, and we are holding on. We have a good position in this company, and there's no recommendation as we speak. This is something which we like at our end. We see that it should do well. We were tracking also at our end, but seems like the problem on the compliance side they are working on it, but it will take some time before we gain confidence to buy that company in our portfolios. The entire research team is working on few things on how things are shaping up. They have done recently few acquisition also, which is one recent acquisition, which is of Valdez, which is on animal healthcare. We have done. I think that's one of the complementary product. They were not into animal healthcare at all, and this will complement their overall portfolio also. So I see that that's another stock which is under our radar, but we are watching it, and maybe it will take some time before we actually venture into and buy this company. But for
Right.
yes, EVs, as they are actually doing a lot of
Right.
R&D on vapor chemistry as well as flow chemistry along with peptides that will help them to grow their overall basket.
Right. So that's with regards to pharma as a space. Another stock that is in focus is an HDFC. Now, in the month of February itself, they raised almost 25,000 crores through 10-year NCDs. And now the board is expected to meet today to consider raising another 57,000 odd crores through NCDs. And overall, if you go to see, this would be one of the largest fundraise as well that we would see in this kind of a format. What do you make of an HDFC as well as an HDFC bank as well, taking into consideration the merger? And do you think this would be the right time to enter the stock, or it's already very expensive?
So let's talk about HDFC Limited first. So I see that it's the largest housing loan finance company in the country, and in line with what government focuses, which is of housing development. This company is, and that's how the lot of scope is building up. So you talk about like the money which they have gathered through long-term bonds. So I'm saying a lot of input now, lot of thrust will be on companies like HDFC or Bajaj Financial or AAA rated very good names, because from 1st of April you see the indexation benefit which you normally used to get in mutual fund is gone. So one thing there, you used to have an edge when you used to complement some part of the portfolio through these bonds or through these FDs along with your mutual fund, is that because okay, fine, you get little better yield, but you don't get a tax benefit. Now you're at a same level playing field. So for them to garner that type of money, it will be much easier when the name HDFC is given. So I'm saying that second thing, when you talk about the merger part, I think there's a lot of synergy which will build up. There's a lot of cross-sell which will build up. There'll be a lot of branches multiplication which will happen. So as we speak, expected profitability for this year is 15,000 crore, for next year is 17,000 crore. They are trading at 18 to 19 times forward P. I don't see it's a very high valuation. I'm not sure about the swap ratio, how this will work, but yes, now it's been approved by NCLT. It's a good buy here. We have HDFC Bank in our portfolio. So HDFC Limited is not a part of portfolio, but yes, I see that the type of position it commands and type of government focus which is there, and now with even playing field with mutual fund deposits or these private deposits, I think they are better off in terms of garnering money, as well as there's a lot of demand which is there of housing loan. So that's called a consumption story, which is coming up. People who are in 2 BHK, they are moving to 3 BHK. So to some extent, I think that's something which is given now. People want to consume, they want to upgrade themselves, and that will happen eventually when we'll have a better per capita GDP, which will move from $2,200 per capita to maybe $3,000. Then your discretion spend will increase. So this entire package is very well placed, and it's a good buy from there. But again, there's no recommendation. We don't have this in our portfolio.
Right. Moving on, Kshitiz, another stock that is in focus is a Phoenix Mills, right? That counter overall has seen good amount of brokerage upgrades as well. In fact, in the last week, you have Morgan Stanley, which has initiated coverage as well. Now, clearly, I mean, the way the real estate segment is moving versus what's happening from an economic perspective, there is a lot of focus in terms of buying. The sales numbers are really showcasing a different story. Do you think real estate is a portfolio to look at? And secondly, what's your view on a Phoenix Mills?
So let's talk about the real estate part first. Here there are two expanding asset classes which can generate, inflation beating return. Gold, yes, obviously gold is one which is a good hedge. I'm not saying it is there for investment. It's a good hedge against all your investment. But otherwise, there's real estate and equity which can generate inflation beating return, because you manufacture something, you create something. In equity, there is a manufacturing company which creates a product, or there's a service company which provides some services. In real estate, you create malls, you do agriculture, you create a society, you create farmland, you do anything which you want to do. A factory is coming up on a real estate. So I think real estate as a portfolio, irrespective of whether I say yes or no, but it should be a part of one's portfolio. And I see most of the people in country, they have major part in real estate. When people talk about their portfolio, they don't talk about real estate. They talk about equity and gold, but real estate is there. So I think real estate from here onward should do well, and with good names, with good malls on the commercial side, you'll have rentals also doing very well. Now, how this entire mall piece is working on, they have 11 malls now. They have hotel in Agra and Bombay. Now, not only mall, they are working on commercial, office spaces also above mall. That is also working really well. So overall yield, which was 13-14%, although they say 15 to 20%, but on an average, real estate, malls, they generate 13-14%. They can step up their yield to 17-18%, which is a good sign for them. And most of these malls have started working on a profitability model with all these brands. So earlier brands were in a better position to negotiate with malls in a better position to negotiate with these mall brands, because a lot of footfall is coming. Again, the consumption story which we were talking about earlier, it's actually playing out in the best interest of Phoenix Mill or any type of company. And it's a very good compliant company. That's why you're seeing the upgrades also. So it reflects in your rating also. So I always feel that, fixed income is a better way to judge, or let's say a rating upgrade is a better way to judge a company. Obviously, numbers are important, but yes, it's a better way to judge. I see this story unfolding in a big way. I see the small culture evolving in a big way. We don't have this company as a part of portfolio, but yes, seems like they're doing right things. So one can do their due diligence before getting into such type of businesses.
Right. Moving on, Kshitiz, another stock which is in focus is a Mahindra CIE. Now, this is an interesting counter because it's clearly doubled investor wealth in the last 1 year. It's given you a return of more than 100%, right? From here on, if you see in terms of the PE, 26.33 and an ROE of around 11.5%. What do you make for Mahindra CIE? This is the time to book profits according to you, or from a business perspective, taking into consideration the way the auto segment has been moving, these could be good levels to still look at purchasing a Mahindra CIE.
So again, a OEM company, and again they have big clients like Maruti, Bajaj, Mahindra. It's an announced brand only. So these are the big. But 60% of revenue is coming from forging from Mahindra CI. So I see that as this culture of whether you need EV car or you need a petrol or diesel car, forging you need for a car is going to spur. Seems like the company will do well, but there is a right price which you want to pay. 26 in this segment seems to be a little high valuations in terms of and what it's trading. So I don't actually understand this technical part very well. I'm more of a fundamental guy, but as you said, whether somebody wants to book profit or not, I can't comment on that. I can only tell you that the scope for any OEM is much bigger than that business itself. If they are increasing their share, which is a car kit value share per car, then you can look at that business to buy. Like, for that reason, Minda is there, which is saying that today we have 27,000 rupees per car kit value, with Maruti will 45,000. So I will like to look at that company, which is actually talking about that how many more parts online it can increase, which it can participate with them. So this is something which we look at. So anybody who's looking at Mahindra CI should look at that how it is going to increase the volume part. If they are going to stay at the same volume part, then to my sense, then time correction will happen if price correction will not happen. Then you should look at it how the business will grow, whether they are adding more features to their basket, which I can't make out right now, or they are increasing their car kit value. Otherwise, just look at not adding and maybe look at few other options.
Right. Kshitiz, very lastly, now you have Crompton Greaves, which has announced the merger with Butterfly Appliances. What would your view be on both these counters?
I think it's a win-win situation for both of them. We are tracking Crompton Greaves, although we don't have Crompton Greaves in the portfolio. Butterfly is basically South India based, and Crompton Greaves has its set of products, and Butterfly is into home appliances. So it's a win-win situation for both. And Crompton Greaves has a very strong setup in East, North, which can be used to offer Butterfly products also. It's a very good acquisition and it's win-win for both the companies. I think with both set of offerings together, they can emerge as a very good franchise together. So I see that a lot of value add will happen with this merger.
Right. So a good value addition in terms of the merger as well. Thank you, Kshitiz, so much for joining us on the show and giving us views in terms of the movers and shakers of the day today. Thank you. Stay safe and speak to you soon again.
Thank you.